Hi there, Trace. This is Brad Gilbert with FX Market Insight for Monday, the 9th of December. All right, now some super strong US non-farm payrolls data has the US dollar back on the front foot. Now, the year-on-year earnings slightly better, month-on-month slightly weaker, but the rate has improved again. And as I mentioned, a huge payrolls number now, much higher than the maximum forecasts. I'm actually surprised the dollar index has bounced sort of pretty mildly at this stage. I think their whole concept of this, potential Trump kiboshing the US-China trade talks has really maybe stalled it a bit, because those numbers there, I would have expected much bigger moves across the board. And if I just give you a look at the charts, I mean, it's diffused. This strong number is a real bit of a bummer, actually, because weak numbers, we would have seen all the currencies pop to the top side. But now, as you can see, the Aussie sort of just still drifting sideways with that little dip down in euro, back right into the middle of that range again, in between sort of 111 and 110. Sterling, it's still doing its own thing. It hasn't really moved back, but we've got a massive long-term level here up around 131 sort of 60. So keep an eye on that. Once again, it's all about, obviously, the UK election on Thursday is going to be huge. Kiwi hasn't done a hell of a lot with those strong US numbers. Once again, I'm a bit surprised about that. And dollar yen had a little pop higher, but pretty muted move. Now, obviously, the one big move was dollar CAD. Okay, you've got that sort of correction back 100 points, exactly where it corrected the move down during the week. Now, obviously, that was to do with the US and Canadian numbers, obviously both coming out at the same time. US numbers really strong. And one of those rare events where you get these data releases sort of matching up, and you've got really weak numbers. The rate there, 0.4% variance. That's pretty big change in the unemployment rate. It seems like there's a bit of an error in the data there, and it's above the maximum forecast, and a real big change in the actual employment change as well. So, you know what? That's going to give the Bank of Canada something to think about, and that's where that big move came on. Dollar CAD. Now, just taking a look at what you need to be sort of looking at around the news. Just have a look where this week we've got the ECB, the Fed, UK elections. We've got a whole heap of stuff coming out. It's going to be pretty big, especially come middle of the week. And starting the week, there's going to be a risk-on profile. Okay, I'll show you the equity markets in a second. But I'd say there's no way, regardless of what Trump says, I cannot see a China-US trade deal of some sort at this point. He needs this to lean on for the 2020 elections, and also to try and sort of deter any news away from his impeachment proceedings. Right, that's where we need to keep an eye on things, and that's where we're sitting at the moment. So if I just bring you across, let me just come back to the main page here. Now, the market should start the week, as I said, with a risk-on profile. US equity markets all closed up, very solid above 1%. S&P obviously just below that, but that's going to put a sea of red, or green, I should say, into the European and Asian equity markets, right? So that's the whole risk-on profile that you should be looking for. Now, with the analysis, last week, we're getting pretty excited. We had the US dollar turning down on all time frames. This strong US number has completely diffused the dollar pairs. Okay, as you can see, most of these were pointing down last week before the non-farm payrolls. Now they're back just trading sideways. The only two pairs for my liking are sterling and Kiwi, which, are sort of still ticking away to the top side against that US dollar short-term trend. The UK, obviously, the Brexit is really coming to a bit of a head here with the UK elections come Thursday. So you're really going to be obviously keeping a close eye on that. Conservatives, if they get through, looks like Brexit will be done and dealt with by January 31st. That'll be a good thing, right? We finally get some closure on that. This Trump impeachment and the China-US trade situation is still burning in the background, and you've got to expect some tweets from Trump this week. He's due. And I've got here, as the market conditions, strong non-farm payrolls has diffused all momentum. And that's just something we've got to grin and bear. All right, now having a look at where the major upcoming sort of momentum is going to come from. Well, there's not much coming out on Monday, but and I generally sort of take Mondays off, right? It's a day to do your analysis, prepare for the week, and all these sorts of things, you know. So what you want to do is have a look down. If you scroll down here, we've got a pretty epic week. Obviously, any week where you've got the Fed is huge. Any week that has the CPI is actually quite huge. So we've got these things, you know, coming out 5.5 hours apart. The US CPI, we've just had the employment numbers really strong. That's going to put the Fed on a neutral sort of basis. If the CPI comes out as expected or even a little bit strong, you know what? They shouldn't have even cut rates last time. So this is going to put pressure on the Fed to really stay calm. They've already mentioned that they're not going to do anything on rates for some time. The non-farm payrolls data shows them, gives us the data that tells us they're not going to do anything. So I think it's well, is it a big event? I don't know, but the CPI numbers is something very close to keep an eye on. So we've got the Fed, okay, followed by the UK elections, and then you've got the ECB, the Swiss National Bank, if you want to throw them in as well, and then running into some US PPI, retail sales figures later in the week. So big central banks, UK election. Okay, what we're going to have to do is really piece together the opportunities. This Chinese CPI number on Tuesday is going to be pretty important for the Aussie and Kiwi, so keep a close eye on that. I wouldn't be worrying too much about the UK data. Even these numbers here, big, high-impacting numbers, they'll be pushed aside as we wait the UK election. And if anything, we may have a nice, you know, short-term 5.5 hours of impact if the CPI numbers are variant. That's worth definitely worth a crack ahead of the Fed. All right, so that's where I'm sort of looking at this week to start with. We'll see how the markets direct us as we go through the week. All right, guys, have a great trade week. We'll catch you later on. Cheerio.